sometimes an appraisal can come in too high.
Yep.
So let's just say you bought a house for $500,000 and the appraisal comes in at $700,000. What could the bank do in that? Hey everybody, welcome to episode number 6 of Buying Your Home. I'm Joe Maez with the Maez Group.
I'm Neshwa, Frost Mortgage. Welcome back.
Welcome back, guys. So last week we talked about inspections and we went into depth about all the different inspections that you can get on a house, you know, which ones you should get, specialty areas, etc. So if you haven't watched that episode, go back to episode number 5 and watch that episode about inspections. So now here we go in episode number 6, and we're going to talk about a different type of an inspection, one that's kind of got inspections all to itself, and that's the appraisal. All right, the appraisal actually is a form of an inspection, and appraisals normally happen when lenders are involved, right, Amar?
Absolutely. Appraisals are a very, very important piece of the puzzle when it comes to the home buying process. Basically, an appraisal is an inspection as well. But the biggest thing about an appraisal, it's an opinion of value.
It's an opinion of value. So who is the appraisal for ultimately? If somebody's getting a loan, right? If somebody's getting a loan on their property, FHA, VA, conventional, whatever the type of loan is, who's the appraisal for?
Appraisal is always going to be on a buyer-sided item. It really backs up the borrower in every way. You really want to know what you're paying for is going to be worth your purchase price, you know?
But ultimately, the appraisal is for the bank.
The bank as well, yeah.
We're going to get down to it. So yes, it's a buyer's appraisal. It's normally a buyer's expense in today's marketplace. It'll be an expense on your part because it's your bank that's going to be requiring the appraisal. Why? They want to know that the property that you're purchasing is worth what you're buying it for. Okay, so we're going to talk about appraisals and what can happen with that.
Absolutely.
Okay? So what are some misconceptions about appraisals that you hear out there?
A lot of people believe, hey, my home is not going to appraise, or hey, my home is going to appraise way over value. I mean, you always have to leave it in the professional's hands and say, I'm going to hire a professional to appraise my home. And it's going to be the lender that actually orders the appraisal on your behalf, just to make sure that there's no outsourced companies doing it.
But there are some common misconceptions when it comes to appraisals. And some of those are when people feel like, hey, I got a great deal on a home, right? And then all of a sudden, the appraisal comes in right at the sales price of what the people were purchasing. What's that about?
Yeah, we see that all the time. And a borrower sometimes is disappointed, sometimes they're happy. I mean, really depends on the situation that the borrower is in, and hoping that how much they want the property because of the appraised value. You really want to get that appraised value to your purchase price, only because the appraiser actually has a copy of the purchase agreement when they do appraise the property. So they know what the property is going to be purchased for.
Well, I just want to set the proper expectations, guys, and that's the whole reason for this series. If you bought the property for $250,000 and it appraises at $250,000, that's what it is. That was the mission of the appraisal, was to see that the property was indeed worth what it's actually being sold for. Okay, check the box, it's done. Okay, now if it comes in less than the than the sales price, what happens then?
If the appraised value comes in lower, that's when we go back to the real estate agents and let them know, hey, property only appraised for $240 and your purchase price was $250. We need some guidance here on what you're going to do with this $10,000 appraisal gap.
So guys, in a situation like that, the property, you bought it for $250,000. It only appraises for $240,000. There's a few things that can happen right here. One, you can always back out of the property, because that was any purchase agreement that we write over here at the Maez Group. And for the most part, a lot of brokers, normal practice is that's a contingency.
Absolutely.
Okay. Now, there are certain situations, if you get into multiple offer situations and your broker has told you that, hey, we're going in $20,000 above list price, but we have to waive the appraisal contingency. Are you okay with that? You have the $20,000 in the bank to make up the gap. So you go up to $270. I know this is going to get confusing. That's why it's nice that YouTube has rewind. All right. So in that particular situation, if you waive contingency, appraisal contingency, then if it only appraises for $250, you're responsible for that other $20,000 to get it to do 70. But the majority of the time, you have the ability to, if there is an appraisal contingency in place, there's a few things that can happen if it comes in at that 240 mark. One, terminate the contract, get your earnest money back, go on about your way. Two, ask the seller to come down to the 240,000. That's normal, especially if you're depending on the type of loan you have, and if you do not have the funds to make up that gap. Number three rather, is you can cover that gap. You maybe have some money saved up. You can go to your retirement, ask a friend or a family member for a gift to make up the difference. If you really like the house, or you have to really move into the house. Those are your three options, okay? The fourth one that can happen, is the buyer and seller can protest the value. So what happens there is you're able to go back to the appraiser, provide them comps. The buyer's broker, the seller's broker, can provide comparables to help the appraiser get that value.
Absolutely. So once those documents are submitted to the lender will send them back to the appraiser, and with the cover sheet showing, hey, here's what I think the home should have appraised for due to these comps that you don't have on the actual appraisal. So please look into it a little further. And I mean, it doesn't always work, but it's always worth a shot.
It's worth a shot, especially if the house is really important to you and you've been looking for a long time, right?
Absolutely.
Or it's perfect for you, right? So those are some things, some expectations that I want to set. Now, there's some other things that I want to talk to you about with appraisals. They don't always come out. It's not just value that can, set an appraisal off. Sometimes an appraisal can come in too high.
Yep.
So let's just say you bought a house for $500,000 and the appraisal comes in at $700,000. What could the bank do in that particular situation?
They can go back to the appraiser and ask them why they comped it out this way, and what are your supporting reasoning behind the comps that
the bank may have a problem with it coming in too high. That's happened in my experience in the past. I'm just letting you know that they might say, well, something's wrong with the property. Something's amiss. Just letting you guys know that could happen.
And the other thing that I see on appraisals every now and then that can hinder a deal is the subject to repairs.
So let's talk about subject to, and that's real estate language, real estate jargon is subject to. What does subject to mean?
Subject to, on a lender's perspective, means that there are issues with the home that need to be revised, refixed, replaced before this closing can
What
take
are some
place.
of those? So remember, guys, this is another form of an inspection. Very rarely do you get subject to appraisals, but what are some of the more common?
So as we spoke about last week, the inspection report is going to be an in-depth perspective on the property, where they're going to show you every little problem with the property, whether it's good, bad, or ugly.
Right.
On an appraisal report, it's basically the ins and outs of a property. They are going to take photos. They are going to look for blatant mistakes on the property, such as roof damage, stucco, shingles.
A roof could make it subject to, if there's an active roof leak in the house, that could be a subject.
Absolutely. We see those happen every now and then.
What else?
And another issue would be dry rot and termites and pests. So
that would be on what type of loans?
the majority of those will come back on a government loan, such as FHA, VA, USDA.
So if there's termites on the house on an FHA or VA loan, right? They're going to ask the seller to repair those items, right?
These are going to be considered lender required repairs. So they all must be completed, remedied, and invoiced prior to closing.
And they have to show that when they say subject to, they have to provide the appraiser with proof that those have been repaired before closing.
And in some cases, the appraiser will need to go back out to the property, retake new pictures for a smaller fee. Thankfully, it's smaller, and it's considered a reinspection fee.
So it's a reinspection. So what's the average cost of an appraisal these days?
I would say about $675 on average. Higher end homes are going to be higher costs on appraisals. Homes in the mountains are going to be higher costs on appraisals. And we've had them as low as $525, and we've had them as high as $1,800 in some cases.
And so what's the norm for payment on that, as far as setting the expectation for our buyers? If the buyer agreed to pay for an appraisal, which most of the time, guys, it's going to be a 90% chance that you're going to be paying for an appraisal. Again, everything's negotiable. I'm just giving you my opinion as to how things are normally negotiated. When is that appraisal? Is that something that comes out at closing, or when is that the money for the appraisal asked for?
So typically we ask for the appraisal funds right after you're under contract, your earnest money's turned in, you're turning in all your documents, you get a condition, you turn in, once the documents are turned in, we ask for appraisal payment, because they can take up to 2 to 3 weeks in some cases, especially during the busy season.
So much like home inspections or any inspections that you're having on the home, this is no different. They're going to require payment up front before they deliver anything. And one thing you guys don't want to do as buyers out there is you do not want to delay payment on anything, because every week that you delay payment on this is a week that it's going to delay your closing, and that may cause you the deal. It may cause you the deal. All right. So what are some other things that you feel now? If somebody's paying cash for a home, obviously your job's the lending side of things, but sometimes you get people that want to pay cash for a home. Can a buyer that's paying cash have an appraisal contingency?
Absolutely.
Of course, everything's negotiable. And so if you're paying cash for a home, you want to know what it's worth. You could pay for an appraisal, make sure that your contract has an appraisal contingency. And if it doesn't appraise for the amount that you're paying for it, you have that contingency to either terminate, ask the seller to come down on price, or you make up the gap yourself based on that. So it's more of, and that particular situation, that's not for a bank, that's for your personal peace of mind. Right?
Absolutely. And from a lender's perspective, we do actually have, in some cases, appraisal waivers. And what that is if your borrower's profile is phenomenal, low debt to income ratio, higher down payment, great credit scores, and the property has knowledge in the system of being appraised in the past, guess what? You may be eligible for an appraisal waiver. And we've been seeing that quite a bit on refinances with a lot of equity in the property.
So you brought something up really good, and you talked about an appraisal being in a system. And guys, I want to this is all good stuff. This is all solid gold, right? And so I want to set some expectations. If you're getting an FHA loan, right? One thing I want you to know is that if you're buying that house, let's go back to that same house that you're purchasing for $250,000. And that appraisal only comes in at $240,000, and it's an FHA or a VA loan. Okay, if it's an FHA or a VA loan, what's something that's important to? And then that you terminate on that deal because you couldn't make up the $10,000 gap. What's something that buyers should know, and also some sellers out there?
Sellers and buyers should both be
know
aware
about that.
Yeah, the issue with terminating a property and not accommodating the buyer is you're going to be stuck with that appraisal typically for 180 days.
So for 6 months, guys, that property for an FHA or a VA buyer, that property is only $240,000 for 6 months. Now, if somebody comes in with the conventional loan or cash, they could still purchase that home for $250,000 subject to appraisal.
Absolutely.
But if you're relying on FHA monies or VA monies, then 240 is the maximum. And what you should know is that if you really want that house for 250, you better have another $10,000 laying around.
Absolutely.
Is that good? Is that pretty
very
accurate?
good feedback? Yes, sir. Yes.
All right, guys. So appraisals, I think we covered a lot. Is there anything else that we're missing on appraisals?
I think they're just very important to have. I mean, it's collateral for the lender. Like you said, it is good to view. I mean, typically they're about 30 pages long, and we always require the borrower to review their appraisals prior to closing.
One more thing, and then we'll just kind of do a recap.
Yeah.
What's the turnaround time on an appraisal? So appraisal happens on a Monday. What's normal turnaround time on an appraisal?
I would say 7 to 10 days is a good average that we're getting them back, especially in this market we're in right now. I mean, during the refinance boom, they were going up 2 to 3 and sometimes even 4 weeks.
So if the appraisal happens on a Monday, guys, gotta have a little patience, and your broker will tell you when value, when it comes. Actually, it's going to be your lender that's going to tell you if there's an issue or not. So, okay, we talked about appraisals. We went over, how appraisals work, when they happen, how much they cost, some of the subject to items that could come up on an appraisal. We talked about if the value doesn't come in. We talked about if the value comes in right at value, that's not a big deal. That's what it's supposed to be. We also talked about if it comes in above value and some of the, things that can happen there.
Absolutely.
We talked about appraisals for government loans, right? That, they stick with the property for 6 months. We talked about that. And we also talked about getting an appraisal on a cash purchase, and the fact that that's totally your right, and an appraisal contingency is normal. And we also talked about waiving appraisal contingencies in a multiple offer situation and how that works. All right. Absolutely. So I hope you guys got a lot out of it. Next week, we're going to be talking about another inspection. We're going to be talking about, in episode 7, we're going to be talking about surveys and how that's super important. We're going to give you guys some crazy stories about wild things that have happened in my career. Definitely some do's and don'ts when it comes to surveys and how that works. So we're looking forward to seeing you